Hey everybody, this is Jim at SP500chart.com. It's about 4:15 on 5/15, March 15th, 2013. We're going to take a look at the S&P. Surprise, surprise, it was up. And, just kind of, I'll be honest with you, it's kind of got me shaking my head is where is the pullback? Where is the, I don't want to say sense, but where is the caution that we used to see when we came off of those March 9 lows where everyone was on pins and needles as the markets climbed a wall of worry? Is there worry right now? Good question. But hey, before we get into the chart, I want to read my disclaimer to you again. I'm going to try it in one breath. Here goes. The website and the video are for educational purposes only, and nothing stated, decided, or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Couldn't do it. But let's take a look at the chart. Okay. The S&P up again today about 0.5%, with the high of the day being put in right over 1660, which, by the way, I mentioned that I had a subscriber who was kind of asking about this dip that we had right here, since we had resistance right at about 1598 or so. Could it be possible that this dip is like, he said an inverted head and shoulders, and it's really not, but maybe this is, quote, what people will call a cup and handle, where you have a cup and then a little handle. And we would measure the depth of this and add it on to the area where it broke out, and that would give us a target of, come on, a little over 1660. So interesting. Additionally, the S&P has kind of been on a little bit on steroids. I'd mentioned that it looked for a while when we looked at the hourly chart that this was maybe starting to roll over a little bit, but here we are. We tagged the underside of this red line again, and even momentarily got over the top of it just for a little bit. I mentioned yesterday that it looked like we may be in a broadening pattern. Blew out the top of the broadening pattern. So I'm telling you, I think what you got to do here, and it's kind of what I've been trying to emphasize, is if we're making a top, then calling the top is going to be really hard to do. It's going to be about as hard to call a top at the point that top is in as it would be to call a bottom. And all bottoms feel like you're trying to catch as they say, catch a falling knife. And trying to sell a top, I mean, if you're long, that's a good thing. You say, hey, I've got enough profits, let's cash in here. But trying to pick a top to short, nobody's done it yet, unless 1660 and change is a top and somebody did it today. So far, for the past 4 years, everybody who's thought they've called a top has missed. Now, we have called some topping patterns that have resulted in significant moves to the downside, and we've also called a number of bottom patterns that have resulted in significant moves to the upside. But at none of those times did at least me, at none of those times did I say, here is the top on the day the top formed. That's just so hard to do. So the idea here is when you look at the charts, your goal should be, I want to get 75% of the up move, and I want to get 75% of the down move. Or if you play it more cautiously in a bull market, you want to get 75% of the up move and then avoid the pullback. Then go long again and get 75% of the next up move, then avoid the pullback. So, to make a long story short, the things that we talked about yesterday are still operative today, despite the fact that this line did not serve as resistance, and despite the fact that at least temporarily this line here didn't really give up, didn't turn the markets back. Now, this green line may be the one that does the trick. You'll notice that it is parallel to this bottom line here. Maybe this is our resistance. Clearly, so far, very little else has been. But this is our last bottom. Here's our leg up that we've had off of 1540. Now we're up 1658 and change. Let's, I think, watch this line. Let this line be the signal that if it's broken by a technically significant margin, then the market is either going to consolidate and move higher or pull back for a bit. Clearly, we could be due for a little pullback. And if we get that, then we've got a couple of areas where we might start to look for a temporary or an intermediate bottom to get put in. But right now, the same word as basically yesterday. If it ain't broke, don't fix it. If you're long, hang with it until we get signs that this is going to turn back down. Until that happens, I wouldn't touch it, and I wouldn't short it here either. Man, I'm tempted. I'm really tempted at these levels to do so. But I think I would be better served to wait for a pattern that says, hey, we're done with this upward move. It's time to give back some of this. Because right now, it almost looks like this selling is, it almost looks like this buying is accelerating. Even though we're kind of up in uncharted territory, no one seems to give a flip. It's just like, hey, the more the merrier. Which brings the question that I posed in the introduction, and that is, do we have enough worry to sustain this move? Because once everybody's feeling good about the markets, that means a lot of money is in the markets. How much is now on the sidelines? Because when you start to dip back down, you need money on the sidelines in order to pick it back up and to create that next wave of buying pressure. If everybody starts piling in up here, then that will not be a good thing. So guys, that's about the best I can do for today. Again, we can watch this line for a sign of selling. We can watch this line. Both of these are support. If they give way, then the market's going to come back and likely at least test this yellow line, or I would love to see it test this line around 1600. We're due for a break, and right now the bears are not catching one. My question too is, you might want to look into, I don't have the facts and figures right now, but could this be this accelerated move that we've had here of late? Could this be shorts in capitulation? Don't know. I'm sure shorts were probably looking for 1600 to turn the markets back down, and they didn't get it. So the question is, at what point will we get the capitulation of the bears? And usually that at least for an intermediate top will create a topping pattern. But right now, not there. Keep watching these rising support lines as your signal that that we may be reversing back down. But so far, if we look at this on a 2-hour chart, we've got a rally that has lasted since mid-November. You can see we are not up to this top line that we were coming up to early on in that rally. But just the same, this rally has continued for 1, 2, 3, 4, 5, 6 months, half a year. And by any stretch, that looks to me to be a rally that is ripe for a pullback. So far, not happening. And so far, no sign of a top. So guys, just enjoy it while you can, and let's keep watching this together. Eventually, we're going to get some broken support lines. It always happens. It will happen. Where? Well, like I said, don't do anything until it happens. You know what I'm saying? Hang with your positions until we start to see some of this support get taken out. But I would, if you're like, I'm mostly cash right now, and I am not looking to initiate anything at these levels. So that's just me. You do what you have to do. But me personally, I think we're kind of up in some rarefied air right now. We're due a pullback. Let's see if we get it. Hey, thanks for watching. Take care. This charting business, it doesn't always work out perfectly, but like I said, we got some clues, we got some cues that we can look out for, and hopefully, if you're sitting on some good profits, then once we start taking out some of these support levels, that may be a good signal to book some of those profits. Thanks. Take care.